Okay, I also have to share my screen. Someone should confirm you can see my screen now. Can we see my screen, please?
Yes,
Yes,
I
sir, we
can see
can
your screen
see
from my
you.
end.
Okay. So someone should please read the question for us. Who is reading for us? 2021 question 1. Who is reading? Do you have anyone who wants to read the question? Miss Zuli, please read the question for us, please. Are you there?
Yes, I'm there. The following is the trial balance of Amara Amajiri Nigeria Limited as at September 30, 2018. Revenue 60,000, cost of sales 4,800, total expenses 29,
All figures
administrative.
are zoomed to be correct. So what we need there is this. Normally, all figures
So
are
can
zoomed
I
to the
see
correct.
the
Okay?
information? Or should
Now,
I-
so hold on, please. Now, all figures are zoomed to the correct, all right? But in natural sense, when we are treating them again, we have to call them one after the other, all right? So let's go to the following information, to the additional information given to us. Go ahead, please.
Additional information one. One of the reputable customers of Amajiri Nigerian Limited sued the company for 400 million for breach of contract over a cancelled order. Amajiri Nigeria obtained a legal opinion that there is 20% chance that Amajiri will lose the case. Okay, you can go.
Okay, you don't have the material. I thought you have the material.
I'm,
Go ahead, please.
the one
Let's
I
go ahead.
opened is not the same thing with this one. Let me check.
Go ahead, please. Don't
Okay.
worry.
Okay. Accordingly, it has provided for 80 million in bracket 400 million times 20% included in the administrative expenses in respect of the claim. The recoverable legal cost of defending the action was estimated at 20 million, and this has not been provided for as the legal action will not go to court until next year. Two, the directors of the company have estimated the provision for income tax for the year ended September 30, 2018 at 2,280 two two point two to 80 million. The required deferred
Two
tax
billion
provision
two
at
hundred and
September
eighty
30.
million. Can you hear me?
Sorry,
Two
what did you say?
billion 280 million.
Okay, noted. Thank you. Okay, so let me read that place again. The directors of the company have estimated the provision for income tax for the year ended September 30th, 2018 at 2,280 million. The required deferred tax provision at September 30th is 1,200 million. Three, redeemable preference shares were issued on April 1st, 2018 at par. They are redeemable at a large premium, which gives them an effective finance cost of 12% per annum. Four, the leasehold property had a remaining life of 20 years at October 1st, 2017. The company's policy is to evaluate its property at each year and as at September 30, 2018, it was valued at 8,600,000,000. 4. On October 1st, 2017, an item of plant and equipment was disposed of for 500 million cash. The proceeds have been treated as revenue by the company. The plant is still included in the company's trial balance figure at the cost of 1,600,000,000 and accumulated depreciation of 800 million. All plant and equipment are depreciated at 20% per annum using reducing balance method. Depreciation and amortization of all non-current assets are charged to cost of sales. 5. 6. In addition to capitalized development expenditure of 4 million, further research and development costs were incurred on a new project which commenced on October 1st, 2017. Research stage of the new project lasted until December 31st, 2017 and incurred 280 million cost. From the date of the project, incurred development cost of 160 million per month. On April 1st, 2018, the directors became confident that the project will be successful and yield a profit well in excess of its cost. The project is still in development as at September 30th, 2018. Capitalized development expenditure is amortized at 20% per annum using straight line method. All expense research and development expenditure is charged to cost of sales. You are required to prepare a statement of profit or loss and other comprehensive income for the year ended September 30th, 2018. B. Statement of changes in equity for the year ended September 30th, 2018. C. Statement of movement in property, plant and equipment to be included in published financial statements. D. Statement of financial position as at September 30, 2018. That's all. Thank you.
Okay. Yeah. So what do we have here, everyone? Now we have start with our P&L account, right? Now, when we have a P&L account, first off, when we are given an income statement question, all right, you need to take note of all your additional information, and also note that your additional information will be treated twice. All information, right? Although basically you might not be asked to prepare all the accounts, but if you're asked to prepare all the accounts, the additional information will definitely take two treatments, two legs, whereby one account is debited, the other account is credited. Am I making any sense here? One account will definitely be debited, while the other accounts will be credited. Okay? Now, let's start with our question. I would have said we should be taking our additional information one after the other. I don't think we have enough time for that. I hope there is nobody on the waiting list waiting for us to admit them in. I hope there is no one. No. Okay, none that I can see. Okay. Now, we have our revenue given to us, right? Now, do we have any additional information on revenue? How do we compute income statement? Maybe we should just look at that. For your income statement, you are looking at your revenue, then you less your cost of sales, right? And that will give you your gross profit. I hope I'm making a sense and I hope I'm not rushing this class. Does that make any sense? Hello? Is anybody with me? Please, you are in this class, you need to unmute yourself.
Yeah, with you.
Okay, so like I was saying, the standard format for income statement is your revenue, After your revenue, you less your cost of sales, right? For the
Yes.
cost of sales, how do we arrive at cost of sales? Yes, who wants to give us that? How do we arrive at cost of sales? Yes, how do we arrive at cost of sales?
Okay.
Anyone?
Yes.
Please,
I'm
is
here.
it
Can
me
you
in
hear
this
me?
class?
Hello?
Okay, Miss Julie, are you there?
I'm here,
Yeah,
sir.
yeah, I'm here.
Okay, do you understand what I'm saying about cost of sales?
Yes.
Okay, so how do we arrive at cost of sales?
Can I say something about that?
Yes, please go ahead, sir.
Okay. Purchases plus closing inventory minus opening inventory. Give us our cost of
Okay, purchases plus opening inventory minus closing
plus
inventory.
closing inventory plus
Sorry?
opening inventory. Minus purchases
Uh,
purchases plus opening inventory minus closing inventory. Give us our cost of sales.
Purchases plus opening inventory minus closing inventory,
Yes.
right?
Yes, yes, yes.
Okay, so that's it. So me, I'd like to start with opening inventory. My purchases should not come before my opening inventory.
Yes.
Do you understand? On your management account, when you are doing cost accounting or PM, purchases can come before, even in your PM self. If in your PM, purchases can come before opening inventory. But this is FI, right? You need to identify what you have at the beginning of the year. Don't forget, your closing inventory for the previous year is your opening inventory for the current year. Am I right?
Yes.
So if that
Yes, yes,
is your
yes.
opening inventory, then what is your opening inventory? Then you can now add what you purchased, the inventory purchased during the year to that opening inventory, and then you less your closing inventory from it.
Choosing industry.
Now, so
Not
your
the cost
sales
of
minus
sales.
cost of sales will give you your gross profit, right?
Oh, yes. Yes.
If that is the case, I'd like to ask a question. What's the difference between sales and cost of sales? What's the
Cost of
difference?
sales and cost of sales.
And what's the
Let me
difference?
try, sir. I think sales is total turnover that we have. While the cost of sales, after we have deduct what the purchases that we purchase from our inventory, we now have cost of sales.
Can someone else try? Can someone else try, please? Okay. Your sales is what you sold. Your cost of sales is the cost you incurred on that item you sold. Your sales is what you sold. Your cost of sales is the cost you incurred on your sales, on the item you sold. Do we understand? Now,
Yes.
if that is the case, your sales is your revenue, right? So after having this revenue, you less your cost of sales from it, then you will get a gross profit. So if I sold an item of 20 naira and I incurred 15 naira on that asset, that is, I purchased the asset at 10 naira, right? The cost of transporting the asset is 3 naira, right? What again? Other costs on that same item that I sold was everything made up 15 naira. Now, if everything makes up 15 naira, because I incurred on that asset 15 naira, if it is 15 naira and I sold it for 20 naira, that means I have gained 5 naira, right? That 5 naira is the gross profit. Now, don't forget that 5 naira, there are some other costs I might have incurred, maybe not directly attributable to that item, but of course, I have incurred some other expenses. All right. So those expenses that have been incurred, they are not directly attributable to what I have sold, but they are part of the expenses of my business where buying and selling takes place. All right. So those expenses as well have to be deducted. And after deducting it, you arrive at your net profit. Okay. Now, that's being said, now that being said, let's come back to this our class. Now the revenue given to us is 60 billion naira, right? Am I right?
Yes.
I said it earlier that you assume all figures to be correct, but when we get to solution, you definitely call all of them out.
Yes.
Now, do we have any additional information on revenue? Do we have any additional information on revenue? So let's look for that. This one is a legal opinion, reputable customers. Please, let's check if there is additional information. All right. It is easy for me to tell you that, okay, go to additional information 1, additional information 5, and you will see the additional information for revenue. It's easy for me to say that. Do you understand? But it might not give you enough time for you to search for yourself. So that's what I'm saying. Do we have any additional information? Now, while the reader was reading earlier, I expected each and every one of us to follow. So, with what the reader read earlier, do we have any additional information on revenue? And what is that additional information on revenue, if there is any?
Yes, sir. We have.
Yes, but
Okay,
We
so
have
which of the information is that?
four. Number four.
number four.
Okay, the leasehold property had a remaining life of 20 years, right?
No, sir.
No, sorry, five.
No, number five.
Oh
On
yeah,
October
somebody should read
1st,
it.
2017,
Oh yeah,
an
read it.
item of On October 1st, 2017, an item of plants and equipment was disposed of for 500 million cash. The
Mm-hmm.
proceeds has been treated as revenue by the company. The
Okay.
plant is still included in the company's trial balance figure at the cost of 1,600,000 and accumulated depreciation of 800 million to date of disposal.
Okay.
All plants and equipment are depreciated at 20% per annum using reducing balance method. Depreciation and amortization of all non-current assets are charged to cost of sales.
Okay. So what do you say?
Okay, it said an item of plants and equipment was already disposed,
Mm-hmm.
and then after disposal, this is still part of the revenue,
The
which is the
500 million.
600. Yes, sir, it's still
Okay.
part of the 60 million.
Okay.
So we need to remove it first.
Why?
Okay, it said the proceed has been treated already as revenue by the company.
Has been treated as revenue, which means it
By
has
the
been
company.
included in the 60 million revenue, right?
Yes, sir. Yes,
60
sir.
billion naira revenue.
Yes, sir.
So since it has been treated, why do you say we should remove it?
Then it also says that the plant is still included in the company's trial balance figure.
Mm-hmm.
Like as of when they treated the this thing, we will need to depreciate it first. We need to depreciate the plant first.
Okay. So now, thank you very much for that. All right. So if the
Thank you.
plant and equipment is at 600 million, but I mean 600 billion, please let's simplify this thing for ourselves. Let's use 60,000.
Okay, sir.
Do you understand? So we have 60 billion naira there, not 600 billion. We have 60 billion naira there. All right. So you will need to be careful when you are doing something like this. So we have 60,000 naira here, and this is 500 naira, because this million will go for the million here. I hope you can see my screen. Can you see my screen? Can you see my cursor?
No, sir.
So no, can anyone see my cursor? Can anyone see my mouse?
Yes, sir.
Yes, yes.
Yes, sir. Am I the only person?
Yeah, it seems you are the only person. Okay, so now 60 billion naira is the value of the asset. I mean, is our revenue. But from this 60 billion naira, 500 million naira has been included there, right? The proceeds have been treated as revenue, and the plant is still included in the assets trial balance at the cost of 1.6 million, and the accumulated depreciation of 800 million to date. All right. So now, if we are to remove the asset, the disposal, which is the revenue from disposal of assets, right? Am I right?
Yes, yes.
Don't forget that's proceeds. That's sales proceeds on disposal of asset. That sales proceeds is also not taxable in taxation, right? Am I right? Okay,
Yes, sir.
we don't have people offering taxation here. Okay, so let's leave taxation since you are not offering it. So that is that. So we have the revenue, and we have to remove 500 million naira from it. Do you have any additional information on it, or that's all our revenue is? Any other information on revenue?
That's all.
That's all.
Okay, fine. Okay, let me just write it out then. What's the name of the account? The diet is May 2021. 2021 question 1, right? So you are not required to write the diet in your own material, but you are required to write the name of the account. What's the name of the account?
Almajiri um Nigeria Limited.
Okay.
Almajiri Nigeria Limited. Okay, now this company we are talking about, all right, we have their revenue in million naira, right? So in case I have, okay, we'll do it as a standard account. So we have our revenue to be what? So should we have a note to the financial statement? Can we have a note to the financial statement? I'll use one site like this as my note. Notes. All right. So notes to the account. So I have note 1 on revenue. And what's the note 1 on revenue? We have 600 minus 60 minus what? Hello? What's our revenue?
60.
60 billion, right?
Yes, sir.
Minus 500 million.
500. Yes, sir.
And what would that give us?
59, 500.
59,500.
Mm,
Do we all agree with that, please? Do we all agree with that?
Yes, sir.
Yes, sir.
59,500 billion, right? or 59.5 billion. Do we all agree?
Yes.
Okay, so that's 59 billion, 59,500. Since we are using it in a million naira here. Yes, we have our cost of sales. So what do we have on the cost of sales? Let me write notes here. This is note 1. This should be note 2. What do we have on cost of? Do you have additional information on cost of sales? Let's go to the question. Any additional information? What's our cost of sales as per trial balance? 4,800, right?
4,800.
Now, do you
Yes,
have any
sir.
additional information on cost of sales? Yes, anyone? I've seen one already. Oh.
Still on the same number 5.
Okay. So what do we have on that
It
number
says that
5?
the let me just read the ending part, that depreciation and amortization of all non-current assets are charged to cost of sales.
Mm-hmm. So what's the depreciation in this question?
We depreciate plant and equipment
Mm,
using reducing balance method.
okay. So what's the
So
depreciation?
our plant and
Twenty
equipment
percent.
at
Twenty
cost
percent. Using
20%.
reducing balance method.
20% reducing balance method, right?
Yes.
Yes, sir.
Okay.
Yes, sir.
So let's look at it this way. What is the cost of the asset? The cost of the
Plant
asset
equipment.
is 1.6 billion. 1.6 million, right?
Yes, sir.
Is it 1.6 million or 1.6 billion? 1 billion 600 million,
600 million.
right?
Yes, sir.
And the accumulated depreciation is 800,
Now we have accrued.
right? Am I right, please?
Yes. Yes. You are right.
Now, what is the net book value? Because cost minus accumulated depreciation will give you net book value, right?
Yes, sir.
What's that net book value?
Cost 1.6 minus 800 to be
800 million.
800.
You said
800 million.
that will be
800 million.
800 million. Now, that
Yes, sir.
800 million, after we dispose of the asset, eh, depreciation and amortization of all non-current assets are charged to cost of sales.
Charge.
This money, this 800 million, have we removed it from our cost of sales now or not? Or is this still part of the cost of sales we have?
Still part of it. We
It's
are yet to
still
remove
part
it.
of it.
Are you sure?
Yes, sir. I'm
So
not
how
sure.
do we do depreciation? When you are depreciating your assets, right? You debit your depreciation account and credit the accumulated depreciation account. I mean, provision for depreciation account, right? Am I right? What's the accounting treatment for depreciation? What's the accounting treatment?
You
How do you
you
treat
debit
depreciation?
you debit your PPE and credit accumulated depreciation.
You debit your PPE and credit what?
No, you credit your PPE,
And debit what?
accumulated depreciation.
That one is for on disposal, right?
Yes.
So on disposal now, you credit your PPE and debit your accumulated depreciation. So if you debit your accumulated depreciation, it simply means that you are taking away all your accumulated depreciation, including the depreciation for the year that is in that, what's it called? Cost of sales. You've taken it, recorded it. Recorded it. Now, when you are disposing an asset, do you still charge depreciation? It depends on the question. Oh. Some questions will tell you that in the year of disposal, they charge depreciation. Do you understand? Hello?
Yes, sir. We are with
Now,
you.
what is the accounting year end of this company? 30th September, right? Do we understand what I'm saying?
Yes, yes.
30th September is the accounting year end, right? So on the 1st of October, usually we charge our depreciation at the end of the year, right? Am I right?
Yes, sir.
So which means now the depreciation that is supposed to be charged for this asset will not be charged for that year because this particular asset has been disposed of. It is the remaining assets that we have depreciation on. Do we understand? Now, the only thing that will be in this account in our cost of sales is if there is a profit or loss on disposal. If there is a profit or loss on disposal of assets, that is what we usually record at the date of disposal of an asset when you are doing your PP, when you are disposing your asset. All right, don't forget, when you dispose of your asset, you do recognize such an asset, right? Am I right?
Yes,
Nobody's
sir.
there. Do we understand that concept? If you don't understand, just tell me.
I don't understand, sir.
Okay, so I'm
So I
saying
don't
this.
understand.
I'm saying this. When you dispose an asset, what is the accounting treatment? Someone told us you credit that asset account, right? Your PPE, and debit your accumulated depreciation. Is that not so? Is that not so?
Yes, sir.
So if you are debiting your accumulated depreciation, it means you are not charging depreciation on this asset you are disposing. Most questions, any date you are disposing the asset in that year, they do not charge depreciation. Most question. And if you are to charge depreciation in that year, it will be stated in the question. But if not stated, it means that you do not charge depreciation in the year of disposal. Do we understand that? Except the question says you should charge depreciation. Are we still together, please? Is anyone there?
You are there,
Yes,
sir.
sir.
Do
Yes,
we
sir.
understand what I'm saying?
I'm a bit confused though,
Okay,
but
so tell us your area of confusion.
from your explanation, the disposal and the proceeds, I don't really get that. Like I'm trying to understand, but the more you're explaining, I get confused.
Okay, so what is a proceed? What do you understand by proceed? What's the meaning of proceed?
Proceed is an income. Now, when we sell something, what we
So
get
it's
in
like
return.
cash received or consideration received, right? Is that it? Cash or consideration received on something, right?
Yes.
Okay. Now, if that is a proceed, you sold off your asset and you collected a proceed from it. Now, for us to look at the asset in your asset account, whenever you are recording disposal of asset, you first ignore the cash proceeds. That one will be in your depreciation account. All right. Now, ordinarily, we shouldn't be having this problem under our cost of sales. Normally, depreciation is always an expense, right? So, regardless of where they have put it now, we want to treat that depreciation. Now, on this asset disposed of, anytime you dispose an asset, you don't depreciate such an asset. in the year you dispose an asset, you don't record depreciation for that asset for that year. Does that make a sense?
Yes, sir.
Does that make any sense? Now, let me give
Yes.
you an instance, a practical example. I have a car. Now, if I sold my car today, and let's say my accounting year end is 30th of April, 23rd of April and 30th of April is close, man. So you can assume that I disposed of my asset at the end of the year. Now, in this year that I've disposed of my asset, don't forget, I've been using that car since last year, May, up to April, right? And I've always recognized depreciation at the end of the year. Am I right? Do we understand what depreciation is, everyone? Hello?
Yes.
Do you understand what I mean by in the year you are disposing an asset, you will not charge depreciation on that asset? Do you understand that statement?
Yes, sir.
Yes.
So that's what I'm saying now. Now, this is disposal. Now, when you dispose of your asset, all right, don't forget the asset was disposed in cash. The proceeds have been treated as revenue, and the accumulated the cost of the asset is 1.6 million, and accumulated depreciation is 800, right? Now, it is a non-current asset, right? Now, when you dispose of an asset, just like the treatment, account treatment that person gave us, you credit that asset. Don't forget, when you buy an asset, you debit your asset, right? An asset account is a debit account. Am I right? Assets are usually debited when you purchase an asset. Is that correct?
Yes.
Okay. That means the opposite will be when you sell off the asset. You credit your asset account and debit your cash. I mean, the proceeds received. Is that it when you are dealing with our depreciation account?
Yes, sir.
Okay, fine. Now, in the asset account itself, you are to credit the asset and debit the accumulated depreciation. Usually, when you buy an asset, you debit the asset and credit your accumulated depreciation. Because accumulated depreciation will always reduce the value of the asset. That is why the cost of the asset minus the accumulated depreciation will give you the net book value. Am I right? Am I right, please?
Yes, sir.
Okay. So in this question, the accumulated depreciation is 800 million. The asset itself is 1.6 million, 1.6 billion. So the difference between them is 800 million. Am I right?
Yes.
That is the net book value of that asset that was disposed. Am I right? Is that the net book value of the asset?
Yes, sir.
Nobody is saying anything. No.
Yes.
Okay. If that is the net
Yes,
book value,
sir. You are
now
right, sir.
Yes, sir.
I thought someone wanted to say something. Shall I proceed, please?
Yeah, please.
Okay. So cost minus accumulated depreciation will give us the net book value, right? If that is the net book value, that means the value of the asset was 800 million. That's the meaning of net book value or carrying amount, right? Am I right?
Yes, Yes, sir. Yes, sir. sir.
This silence is dragging me back. We have spent 39 minutes discussing only cost of sales. 39 minutes, now 40 minutes. Please, we need to respond. If you don't understand, just say it. If you understand, let us move. We have just 2 hours for this class. That means we have 1 hour, 8 minutes to end this class. Exactly 1 hour, 8 minutes. Because by 9 o'clock, I must log off. Now, the cost of the asset is 1.6 million. The accumulated billion, accumulated depreciation is 800 million. That means the carrying amount, the net book value of that asset is 800 million. Am I right? At the
Yes.
date of disposal, the value of the asset is
Yes, sir.
800 million. Now, if the value of the asset is 800 million, how much did we sell the asset? I'm asking a question now. How much did we sell it?
500.
So we sold it at
Good.
500. An asset that is
500.
worth 800, we sold it at 500. Was that
Yes,
a
sir.
gain or a loss?
Loss.
300.
A loss,
Plus.
right? So that loss on
Yes.
disposal as well must have been included in the income statement as part of the cost of sales, because that is where we
Sales.
have our depreciation recorded as well. Do we understand?
Yes, sir.
So this loss on disposal of asset will also be removed from that asset. Will it be removed or added? It will be added, right? It is a loss.
Yes.
So that loss has to be added to the cost of sales. All right. Now the next one we have,
Yes, sir.
which other item do we have on the cost of sales?
Amortization.
Amortization. Okay, where
Yes,
is the
sir.
amortization? What additional information is that? What additional information is the amortization? The same information, right?
The same information. Yes, sir.
So now depreciation and amortization of all non-current assets are charged to cost of
Cost of
sales.
sales.
So what
Yes,
is
sir.
our amortization? Which of the assets is amortized?
Intangible assets.
Which of the intangible assets? Where is the intangible asset? Which of the additional information? What's the additional information from the intangible asset?
Number 6.
Thank you. Uh, Research and development, right?
Yes, sir.
Okay, someone should read that.
In addition
Okay.
to capitalized development expenditure
Mm,
of 400 million,
mm. 400
further
million,
research and development.
4 billion, 4 billion,
Yeah.
Okay,
4,000 million is 4
4
billion.
billion.
Right?
Okay, 4
In
billion.
addition to capitalized development expenditure of 4 billion, further research and development, right? Of 4 billion, comma, there is meant to be a comma after that 4 billion. Further research and development were incurred on a new project which commenced on 1st of October 2017, right? That's at the beginning of the accounting year. You are preparing for 2018, right? Yes. We are preparing for September 2018. Now, the research stage of the new project lasted until December 2017 and incurred 280 million cost. From that date, the project incurred a development cost of 160 million per month. Okay? The project developed 160 million per month. So please, you two should have your calculator with you. Now, if the project is 160 million per month, times 12 months will give us 1.9 billion, right? Okay, let's leave that. Now, on the 1st of April 2018, the directors became confident that the project will be successful and yield a profit well in excess of its cost. The project is still in development as at 30th September 2018. So capitalized development expenditure is amortized at 20% using a straight line method, right? So what is that cost? They said capitalized development expenditure, right? Are we there?
Yes, sir.
Yes, sir.
Okay. Capitalized development is 20% capitalized development. So what do we have here? Yes. What's that information telling us? Yes, what do we have? Yes, what does that give us? Hello?
What's the question?
Capitalized development. See, the question is this. Capitalized development expenditure is amortized at 20% per annum using straight line method, right? And the question has given us all the information. Now, this is it. We have three figures here. This is the capitalized development expenditure. It's already in the statement, right? But here, they are giving us additional information that there is a new project that is coming up. The research stage of that new project lasted up to December 2017 and incurred 280 million. All right, and the project incurred development cost of 160 million per month. As at April, the director became confident that the project will be successful and it will yield a profit. But as at September, the project is still in development. It is still a work in progress. So everything here, this research and development, eh? This research and development is an expense, right? That research and development, is it part of our cost of sales? Yes, because the question says that all expense research and development expenditure is charged to cost of sales. So which means this research and development as well is a new one. No, we've not recorded it, or have we? Have we recorded this research and development? Hello?
According to question, is inside our cost of sales.
Which one is inside?
The research 280 million and
Are you sure it's already there? Are you sure it's
yes,
already there?
It is not.
yes,
It is not.
Sir?
it is
It
there
is
now.
not there.
It is
But
not
this is
there.
20.
The research and development has not been added yet. Do you understand? The project commenced on the 1st of October. The research stage of the new project lasted to December. So for the research, we have 280 million. And it will incur 160 million naira per month. Right?
And
Are we there, please?
yes,
So it lasted up to December 31st. So which means January, February, and March. Then do we have April inclusive? Eh? Have we recorded April? Okay.
oh no,
See, I'm only giving room for every one of us to analyze this. I just don't want to be bringing the figure and say that this is it. Do you understand? That's the essence of all these things we are all looking at. So coming back to the research and development, we have amortization, right? Now this is a capitalized development expenditure of 4 billion naira. And this capitalized development expenditure is to be amortized at 20%, right? So our amortization, so let's do our amortization. Let me do note 2 here.
800,000.
Cost of sales, right? So for that cost of sales, what do we have?
sorry.
We have identified one item before. What's that? We identify loss on disposal, right?
What's on display at 300?
300,000. No, ordinary 300 since we are using this figure. 300. Yes, what else we have? Amortization. How much is our amortization now?
800.
So let me show the 300 figure
20%
here,
of 4 billion.
right? So for the 300 figure, we have it as the cost of the asset was 1.6 billion, right? Right? Minus 800 million, right? Whatever we get, the sales proceeds was how much? 500 million, right? So what do we have? That gave us 300. And here for our amortization, what do we have as amortization? 4 billion,
Times 20%.
4 billion times 20%. And that gives us how much? 800,000.
800 million.
800 million. What else do we have, please? Yes. So we are talking about our research and development as well. So for research and development, R&D, please permit me to use R&D. How much our research is that? Oh, someone is knocking on the door. How much is our research and development? So in the
80,
question,
160.
sorry,
280, 160.
so we have 280, 280 million and 160, right? Now, the
Yes.
280 million and 160. How long will it take us to spend this 160 million? Because this 160 million is per month, right?
Okay, now we are going to pour it.
Mm-mm. We are not prorating. We are spending 160 million naira every month.
Okay.
All right. So, but on the 1st of 2018, that's when we became confident, right? We are not told on how much, how long they spent the money. So then that means after March, they were able to ascertain that the project will become successful, right? And once you are able to ascertain that, then it is time for you to capitalize it. But up to this moment, it will still be expense. So we have a research of 160 million, sorry, a research cost of 280 million and
Development
development
cost.
cost of 160 million for January, February, and March, right? Am I right?
Yes.
160 plus, is it 160 or 280, please? Someone should help me.
280, 280 and
280.
160.
Okay, so the first one is 280
They
plus
call with rent though. They
160
call with rent now.
times 3 months, right? And that gives us how much? That gives us how much? 160 times 3. 480. So 480 plus 280. 760. Please, are we together, guys? Are we still together? Is anyone there? We
How,
proceed.
how, how is it 3 months, sir?
January, February, and March. It was in
Okay,
April that they were sure that that project will proceed, will be successful. And once you are sure it will be successful, then you can capitalize it.
okay.
All right. Now back to the question. So now we have not taken our leasehold property, right? So leasehold property has a remaining life of 20 years. It was revalued. So what will be the depreciation on it? What's our leasehold property in the trial balance?
1,000.
10,000,
10,000 million.
right? That's 10 billion. Now this 10 billion, will it depreciate or not? It will depreciate,
We appreciate.
right? So what's the depreciation on it? Yes, what's the
20 years.
depreciation? Sorry?
It is not the remaining useful life is 20 years.
2,000.
It depreciates for 20 years, right?
Yes,
Yes.
sir.
Okay, so now the depreciation will relate to the previous year, right? So October 1st, 2017, that's at the beginning of the year, right? Now, as at the end of this year, that's when they revalued it. But before they revalue, would have depreciated the current year first, right? The one that ended in 2018. So what's the depreciation? Depreciation is 20 years, right? On a straight line method. Our assets are depreciating on a straight line method. Or what? Reducing balance. All plant and equipment are depreciated. Okay, only plant and equipment are depreciated on reducing balance. All plants and equipment, right? So they didn't tell us this one, whether it is on reducing balance. They only gave us the remaining life. So if we have 10,000 here and it will depreciate for 20 years, so what do we do? 10,000 divided by 20, right?
Yes, you have
Am I
500.
right? Okay, so which means, have I done any depreciation before? No. So for depreciation, the first one is what? Leasehold. And leasehold is how much? 10,000 divided by 20 years, right? And that will give us what? Who is calculating for us, please?
It's 5,000, 500,
500, 500,
500.
500.
500. Thank you. Then also we have another asset here. This one is for leasehold, though, but coming to this place, we have another asset here, which is plant and equipment, right? Now, don't forget, our plant and equipment, all plants and equipment are depreciated at 20% at reducing balance method, right? 20% of reducing balance method. So come back here, let's check this one. What's our asset?
15, 5, 320 billion.
15,320,
Billion.
right? 20% of it is what? No, sorry, don't forget. Hey, not 20% of it, please. Your 15,320 has an accumulated depreciation of 4,920, right?
Yes.
How much is the accumulated depreciation? 4,920,
4920. Yes.
right? Now,
Four
that 4,920, I'm listening, please.
thousand nine 20.
Okay, I thought someone wanted to say something. Do you have anyone who wants to say something?
Sorry, how did you get your accumulated depreciation?
Is in the
It's
question,
already
not
there
me.
now.
Accumulated depreciation up to January was this.
4920. The remaining is, we now have 10,000, 10,400.
Okay, okay. Okay, I've seen it. Thank you.
10,400, right?
420. Yeah.
Am I right? Now that
Yes.
10,400, there was an asset that was disposed, right?
Yes.
Which is how much?
500.
500. Was it 500? Was
Plant
it
and plant and
500?
equipment was disposed.
Plant and equipment
Was
was
disposed of
disposed as 500 cash.
for
And
cash.
that is the money you received when you disposed it.
Okay, okay,
Have you forgotten?
okay, okay.
That's the money you received when you
That has been treated
disposed the
as
asset, right?
okay.
Please, are we there?
Yes, yes, yes,
So
we
for
have
your
there.
assets now, right? The the calculation for which, what's the name of the asset? Plant and equipment, Abby.
Yes.
Yes.
So for your plant and equipment, the assets now, what's the value of the asset in the question in the trial balance?
For nine
15,000 what?
twenty. I'll be
Eh?
15,000, 15,320.
320 minus
15,320 minus accumulated
minus
depreciation of how much?
4920.
4,920, right?
Yes.
From
Mm-hmm.
that 4,920, don't
15,400.
forget, we have disposed of an asset, right? Am I right? Am I right? Do
Yes.
you want me to do the T format? Okay, I'm coming. We have disposed of an asset out of
Sir,
this
how
15.
did you get? How did you dis
How did I get what?
the disposed asset? Are you using the 500 in this depreciation leasehold? Is that the 500 you're talking about?
I'm not using any 500 here, sir. I said 500 is the money you collected. That is not the value of the asset you disposed. I've not written 500 though. Can I proceed?
Yeah, you. Okay, sir.
Can I proceed, please?
Yes, sir.
So out of this 15,320, an asset of 1,600 was disposed, right?
Yes, yes,
So if
yes.
you are disposing the asset, if you are minusing the asset, then you need to plus the accumulated depreciation
The
of
depreciation of
800.
800.
Does that make any sense to us, please?
Yes, yes.
Does it make any sense? Go ahead, please. Someone is raising
Sir,
up his
sorry,
hand.
I didn't understand that.
Why are you adding the 800 naira?
Why are we plusing the 800?
Okay. Now, the reason we are
Yes, I said, why
plusing,
are we plusing the
I
800,
know, I
sir?
heard you. Don't worry. I'll write it out here now. So this is what I'm saying in essence. So this is the asset account. You can see my screen, bar. You can see my screen,
Yes.
bar. So the
Yes, sir.
value of the
Yes.
assets, balance brought forward, balance brought forward for the asset is how much? 15,320. Abi is on the debit side, right? Am I right, please?
Yes, sir.
Okay. Accumulated depreciation is how much? Will be on the
For
credit side.
920. We'll be on credit side.
4,920, right? Now,
Yes.
from this 15,320, I disposed of how much? 1,600.
16.
If I dispose of 1,600, disposal value, 1,600, which means out of this 15,320, 1,600 has left the account, right?
Yes. Yes.
Automatically, out of this 4,320, how much is leaving the account? 800
800.
disposal.
Accumulated.
Accumulated depreciation.
Accumulated depreciation on disposal will also be 800. This is exactly what I'm saying. Do we understand now?
Yes.
So I said 15,320 minus 4,920 minus everything on my credit side will minus, right? Minus 1,600 plus
1600.
800. What does that give me? Everything you get will now be multiplied by 20% as you're reducing balance method. Please, what do we have? Who
We
doesn't
have
understand again?
9,600.
Do we understand what I've written here?
Sir, I do
Yes, ma'am.
not know how you got the 800.
The
Accumulated
800
disposal, depreciation on
How did you
disposal.
got the
is in the question.
yeah.
Okay,
Information
I don't have
4.
the question. I'm looking
You
at the
cannot
screen.
be in this
Okay.
class and not have the question. I shared the question to the group. The question is on the group. Oh, someone is saying I should have them in, and I can't see them here. Someone sent it to the group that I should have them, and I'm not seeing anybody on the waiting list here. Have you seen it now, please?
Let's continue.
Yes, sir. Yes, sir. Thank you,
Please
sir.
open your math. Were you not the one who asked the diet you were solving? Were you the one who asked
Yes,
the
I'm the
diet you were
one,
solving?
sir.
But you didn't open it. I sent the material is
Yes,
already
yes.
on the group. You didn't open the material.
Yes, I'm only using my phone. I don't have my laptop here, so I'm following the
Okay.
class just on one phone.
Okay,
Yes,
that's fine. It's because you
thank
joined
you.
late.
Mm.
So we've talked about the this,
All
this
right.
is the this is the accumulated depreciation and disposal. It's on my screen here.
Yes, sir.
So
Thank
that's
you, sir.
so what do we have next, please, guys? What's the difference?
9,600. We now do 20% of it, abi?
Yes, Mr. Ibrahim, go ahead.
Okay, thank you, sir. Sorry, sir, please. Looking at this key format that you did, is it ideally because accumulated depreciation on disposal, you put it at the credit side, which that one is very clear to us. So concerning the other one, accumulated on disposal, no, accumulated depreciation, you wrote it at the credit side, right? Which that one is very clear. But for the accumulated depreciation on disposal, is it ideally that one supposed to be in debit side?
Yes, it will be on the debit side, and this is it. The essence of bringing our disposal to this credit side, this 1,600, is because we want to reduce the value of this 15,000. Is that the reason?
Like we
Yes, sir.
credit our PPE,
So
then we need
now,
to debit
if
our
if
disposal.
my accumulated depreciation is on the credit side and I want to reduce the value of that accumulated depreciation, how can I reduce it? It has to be on the opposite side.
Okay. Okay, sir. Thank you, sir.
Ah, please, Miss Joy is saying that we should let her in. But I can't see anybody on my waiting list. It's not showing. Cancel. I don't know. It's not showing on my list. I hope everyone can see my screen.
Yes, sir.
Yes, we
It's
can
not
see your
showing
screen.
on my screen. Nobody is on the waiting list. It's not showing that anyone is outside.
Mm.
It's a network, I guess. Okay, so now what do you say we have here, sir?
9,600.
9,600. 20% of 9,600 is what?
1,920.
1920. Any other information? Yes, any other
Yeah,
thing?
you like that. Just like,
Any other thing? I've not added the one as per trial balance, so, right? Any other thing? I guess there's nothing again. We've taken all
Yes.
the additional information we have, right? So let's take the cost of sales as per trial balance, as per TB. How much is our cost of sales as per trial balance? Yes, what's the cost of sales? 4,800, right?
4,800.
So
4,800.
4,800. What do we have in total for our cost of sales?
Over.
Whoa. Yes, I have it as 45,080. All
It's
right.
correct. Yes.
Okay, 45,080. I'm using Excel. Oh. So my Excel should be more correct than your own. So we have to less our cost of sales, right? Right?
Yes.
Okay. So less cost of sales. What do we have? That gives us 14,420. And this is automatically our gross profit, right? Now, after our gross profit, let's look at the expenses we probably have in the trial balance. So in the trial balance, we have distribution costs. Do we have any additional information on distribution costs?
Okay.
Any additional information? Have we mentioned anything on distribution costs? No.
No.
No, right?
Yes.
So what's our distribution cost? 2,900. 2,900. Oh, sorry. It's an expense.
Minus.
So let me just put it in bracket. And here after distribution cost, what else do we have? Administrative cost,
Yes.
4,440.
There's additional
There is additional
information.
information. Thank you for that. You remember. So we have 440 here, 4,440,000, right? So admin expense. So we have 4,440. So what's the additional information on admin expense?
I will say according
Is it
it has
not
been
the
provided
information
that
one, additional
80
information one, Abby?
yes, information
Okay. Yes. So we have it
Marriage.
that
80 million
mhm,
provided that 80 million
has been included in the admin
included in the
expenses in
administrative
respect of the
expenses
claim,
irrespective of the claim.
right? So we
Yes.
now
Oh, I
have
can't see your screen again. No. I don't know if it's telling me.
It's your
Yeah, we
network.
can
I
see
can
it.
see.
It's your network. Log out and log in back.
I don't advise you to log out. Oh. You might not be able to log in again. Oh, God, this network
just work on your
network.
network.
Work on your network. So
I've
once you
seen
work
it.
on your network, okay, thank you. Once you work on your network, you can now restart. Okay, fine. So in our admin expenses, 80 million has already been included in our admin expenses, right?
Yes.
Now the unrecoverable legal cost of defending the action was estimated at 20 million, and these have not been provided for as legal action. Do we understand? Hello?
Yes, yes. Are we deducting that 20 million from 80 million?
Now, what does that statement mean? We have made provision for 20
Or 80
for 80 million in our account,
unrecoverable legal cost of
right?
defense.
But right now, as we are looking at it, the only amount that we cannot recover from that legal cost will be
It's
20
20 million.
million,
Okay. And these are
which
not.
means now the whole 80 million we have estimated, don't forget it is a provision. That whole provision of 80 million, we don't need it anymore. Why? Because the question says that 20 million, because the question says that these have not been provided for as the legal action. Why? Because the legal action will not go to court until next year. So which means the 80 million we have provided for as our contingent liability in case we lose that case, that 80 million, we don't need it anymore. The only thing we should provide for now is the 20 million naira legal cost. Do we understand?
Yes.
So we are saying that at this case, so if we lose the case, so we will be spending 80 million. But now we are not even going to court again this year. So which means we should not provide for anything again this year. Since the case will be decided next year, then we can make that provision for the coming year, not this year. But the only thing is that we already have 80 million in the account. We already have 80 million provided for in the account. Now, the only one we need currently this year is 20 million. So which means we should reduce our 80 million to 20 million. So which means from this 4,440,000, we should reduce it by what? 80 minus
80 minus
20. We should
20.
reduce it to 20 million.
Okay,
Do you
sir.
understand? So that 20 million is what is going into our balance sheet. Don't forget I told you that if you have any additional information, it will be treated twice, right? I told you to be treated twice, Abby.
Yes.
So the
Yes,
second
you did.
treatment will be in your balance sheet. All the additional information, don't worry, we'll treat them in their second leg as well. We have less than 20 minutes to end this class. So what do we have here? 4,440 minus 60. They give us what? 4,400, 4,360.
4,340.
Is it 340?
4,340.
No,
Yeah.
Yes.
it cannot be 340. It
Oh,
cannot be 340.
4,440.
4,340.
It's,
Sorry.
It cannot be
it's
340.
380.
That is a whole 100 you are
Three,
removing.
4,380. Sorry.
Are we sure it's
4,380.
4,380?
Yeah.
Are we sure? Okay,
yes.
4,380. 4,380. Yes, what else do we have in the question? Interest on bank borrowings. Yes, what's our interest on bank borrowings? Do you have any additional information on it?
No.
Are you sure? Me, I saw one. Oh.
What about, what about distribution cost? We have not
We've
done
done
that.
distribution costs now. These are distribution costs, 2,900.
Okay.
Yes. So our interest on bank borrowing is also known as finance cost, right? So what's that interest on bank borrowing? I think we have additional information on it. So here we have how much for interest on bank borrowing, 40 naira, right? Now let's go to the additional. I think there's an additional information on it. additional information. I saw one place. I can't remember, but I think I saw it. Question in information. No, this is income tax provision.
Information.
Information three. Thank you.
Number two
Is it two or three?
is two.
Okay, I'm coming. Let me have
Wait.
this. Oh yeah, someone should read that information too. Ah,
The
Madam
director
Joy.
of the company
Madam Joy.
has estimated.
Miss Joy, are you there? Miss Joy, you just joined us.
Yes, sir.
Finally, thank you,
Fine.
sir.
Finally, thank you for joining. So for the information two, yes, what do we have?
The director
No,
of
this
the
one is
company has
provision.
estimated. At least I yes, what income tax.
This one is for income tax. So this one is deferred income tax now. Eh?
What are we solving? Okay, you said finance
Information.
We're
costs.
talking of finance cost, and that's information three.
That's
So the redeemable
three.
preference share
Yes, sir.
were issued on 1st of April at par. The redeemable, this is redeemable at large premium, which gives an effective finance cost. I know I saw finance cost. Finance cost of 12% per annum. So what is our redeemable share, preference share in the question? Yes, what's the redeemable preference share? This is dividend though, not dividend though. The preference share is a liability. So we have
4,000.
4,000, right? Now 4,000 at 12%, right? Right?
480. 480.
Now the redeemable preference share that is shared during the year. Hello?
Yeah,
And
with you, sir.
Now the minimum preference share for during the year is where we have it at 4,000, right? Do you have any other one? Do you have any other preference share?
preference dividend paid.
Eh?
Preference dividend paid.
Preference dividend paid. Yes, what is that? No, preference
Dividend
dividend. That
principal.
one is dividend. That one is interest. So this preference dividend paid, that one is the dividend that was already paid,
It's interest.
right? This one is dividend already paid. But here we have how much? 4,000, right? So 4,000 times 12% is what?
480.
480.
480. Ah, okay, that one was issued during the year, right? But what about the one that we already have? Now, this one that was issued during the year, when was it issued? In 2018.
2020.
So we don't even have anything to do with this 2018. Oh, okay. It was issued in 2018 April, right?
Yes.
Are we there?
Yes, yes, sir.
2018
Yes,
April. When are we
sir.
closing our account?
September 31st.
31st.
31st, right?
Yes.
Okay, so if it is September 31st, now this particular one that we have is how much?
480.
So the 480 that we have, that is 4,000, right? Somebody is, okay, let me write it on my Excel sheet straight. So for this finance cost, we have it as, let me put this here. Sorry, so that I don't use this. I want to be using, let's say, information 3, note 3, note 4. So let me put this as 3. Now note 4, let me put my finance cost in note 4 so that we can treat it. Now, for our finance cost, they said we have 4,000, right? Now, that 4,000, we have it given to us at 12%. And that's 12%, it was issued out when? In April. When do we close our account? September,
September.
right? So are you going to claim this 4,000 for the whole 12 months? For the
We
whole
prorate
year?
it.
No. You prorate it by 6 over 12 months, right?
7.
Is it 7?
7 months over 12.
April, May,
7.
June, July, August, September. Me, I have 6. Oh,
Okay, 6.
me, I have 6. Oh, are we all together,
Yeah.
please?
It's 6 months.
So times 6 over 12 months, right? Whatever we get here, did we pay any dividend during the year? I mean, any finance cost during the year in our trial balance? Did we pay anyone during the year? Yes, we paid an interest of 14 naira
Eight,
during the year.
if, no.
Where? What
Yes,
do you call
sir.
it, please?
Interest on bank borrowing,
Yes,
finance cost 40.
yes. So that is 40, right?
Yes, sir.
Okay, so if that is interest, so whatever we get here plus our 40 naira in the trial balance, or let me bring this 40 naira to another account. So let me do it this way. Yeah, I'll do it this way. Whoa.
280.
Okay, so for my finance cost, so for the finance cost now, as per TB, what do we have as per trial balance? 40 naira,
40.
That is
right? And this one is, what will this one give us? 340. For those
getting
who are calculating, 340, right?
240.
over
240. 240.
12.
Is it 240? Okay, so if
Yes,
it
it's
is
240.
240, so what do we have here in total? That's 280, right? That means my finance cost is 280.
280.
Shall we proceed, please? Shall we? Okay, now the next item we have here after finance cost, research and development has been included in our cost of sales already. Is it cost of sales? Yes, right? Yes, it has been included. Leasehold property, we don't need the cost. We don't need this cost. We've taken so we've taken the depreciation element of this. This capitalized development expenditure has been, we've done the amortization. Development expenditure, this is the previous amortization. Closing inventory, right? Am I right? So closing inventory, we didn't use it because they have accounted for it and made it part of the cost of sales. So we need this closing inventory for our balance sheet, right? Now, note something. All the information here, from your revenue down to this leasehold property revaluation reserve, everything will be treated once. Everything will be treated once. While your additional information, information 1 to 6, will be treated twice. Additional information 1 to 6 will be treated twice. Let's take note of that. All right. So that means, so we've taken this: bank is balance sheet, trade payables, preference share paid, dividend, ordinary share. All of these, they are for balance sheet purpose. So let's our
Sep-
other. Yes, please
Please,
go
I have
ahead.
a question.
Go
The
ahead with your question.
240, how did you come out with it? I think network disrupted me, the 240.
So can you see my screen now?
The finance cost redeemable
Yes.
240.
Can you see my screen?
Yes, sir.
Okay, so in the question,
$4,000.
additional information 3 told us that we issued out another
3.
preference share
Yes, sir.
at 12%. And what's the preference share we have at par? We have a preference share of 4,000.
40.
Where is it? No,
Okay,
preference
yes, sir.
share
4,000. 8% redeemable preference share. I've seen it, sir.
8%. Okay, 4,000. Now this 4,000, what is the interest on it at 12%, right?
Yes, sir.
So 12% of 4,000 will give you what? 320,
480.
480.
Yes,
Now
sir.
that 480, uh The redeemable preference share was issued out in April, and this
Yes,
twelve
sir.
percent is for 12 months, right? Am I right? Hello, are you there?
Okay.
Can you hear me, please? Hello? So network has disrupted that again. Please, let's move on. Now, what else do we have?
So I can hear you. I was asking the same question you're answering. So me, I can hear you.
Okay, so now
Yes.
the 4,000, what did you get? 420, or what did you
It's
say?
480.
Now that
480.
480.
Yes, sir.
Now I'm saying that this 12% is for 1 year. Where is that 12? This
Okay, sir.
12% is for 1 year, right?
Yes, sir.
Okay,
Yes,
Per
so
sir.
we
annum.
close
Yeah.
our account when? When did we close our account? September.
Okay.
Yes,
30.
Am I
sir.
Yes.
right?
September.
So if we close our account in
Yes.
September, that means you cannot claim an interest of 1 year for 6 months. So April to September is 6 months, right?
Okay. Yeah.
So
6
that
over
means
12.
you, yeah, 6/12, you prorate it. So
Uh,
that's how we got
okay, sir.
this. So that's why I said 4,000 times 12% times 6/12 months. And that gave us 240. Any other question?
Thank you, sir.
Okay, so now let's get our net profit, which is this plus this plus this plus this. And that gives us 6,860, right? This is a PBT, profit before tax. All right. So do we have any tax in the question? Income tax. What's our income tax expense? Now we have additional information on taxation, on tax, right? So let that be our note 5. Let it be note 5. So what's our income tax? As per TB, how much is it? Do you have any income tax as per TB?
We have
What's the
deferred
income
tax.
tax? No, I know we have deferred tax, of course. Do we have income tax? What's the income tax
So
in the question? You have deferred tax of 1,160, right? So that deferred tax, we'll talk about it. Do you have any income tax? Like tax in the question? We have
no,
additional information on it. Yes, it's in additional information. Information 2 also. The directors of the company have estimated the provision for income tax for the year ended 2018 to be 2,280,000. This is the tax for the year. Abi?
yes.
Am I right? So this is our current tax, Abi. Now, current tax, we don't have as per TB. Current tax is how much? 2,280,000, 2,280. Right? Am I right? Is anyone following me, please?
Yes, we are.
Okay, now we have a deferred tax as well. So what is our deferred tax? Now, in this same additional information, they told us that the required deferred tax provision for September 30 is 1.2 million. Now, already we have a deferred tax provision of 1,160,000. Hello.
Hi.
Now, do you know what a provision means? What a provision means? It means that, do you know what it means? It means that we provided that our tax liability is 1,160,000. So already in our account, we have kept money of 1,160,000 in our account as our deferred tax. What is a deferred tax? Oh, a deferred tax is the tax we are owing, we have not paid. Hello? sorry, sorry, I was thinking of something else. I was thinking of a provision. Now, deferred tax means that the tax you were supposed to pay last year, you deferred it to the future. Now, what you are supposed to pay, deferred payment now, Abi, you've heard about deferred payment before, right? Hello? Somebody should talk now.
Yes,
Whether
sir.
yes or
Yes,
no,
sir.
just say it. Don't be silent. Just talk. Yes or no, just say it.
Yes, sir.
We have 9 minutes to end this class. Now, there was a deferred tax that money we were owing at the beginning of the year, we were owing 1,160,000. We have not paid. Now, at the end of the year, we have another deferred tax. So this deferred tax of 1,160,000 has increased to 1.2 million. Let me use 1,160. So this deferred tax of 1,160 at the beginning of the year, as at the end of the year, it has increased to 1,200. Is that not an increase?
Yes.
That
Yes.
means we have an additional tax expense for this year, right?
Yes.
So which means after paying our tax for the year, which means we did not pay this whole 2,280,000. We did not pay everything. We still left some of them unpaid. And that's why our money, if I'm owing you 1,160 at the beginning of the year, and then I had a transaction of 2,280 with you this year, and you are telling me that my money has increased from 1,160 to 1,200, does it not mean that out of this 2,280 that I bought from you, I did not pay everything? Is that not what it means?
That's what it means.
Is that not
Yes,
what
sir.
it means? So which means I am
Yes.
still owing, right? So now, what is my deferred tax? So deferred tax will now be 1,200 minus 1,160. How much am I owing you now?
40 naira.
40.
I'm
40.
owing you additional 40 naira. So if I'm owing you additional 40 naira, how much is my tax expense for the year? This plus this. Don't forget, you add owings, right? Your accruals. If you are owing money, you add it to the current account, right? So that is it. That means my income tax expense is how much? 2,000 to 2,320. Any question on that? Any question?
So, sir, how do
Any
you
question?
want
Go
it?
ahead, please. How did I what?
So, how do you go down 1,160?
It's in the question, it's in the trial balance. This is it here. 1,160 deferred tax at the beginning of the year. Have you seen it, sir? Have you seen it, sir? Eh?
Put it that 1,160.
I can't hear
Okay,
you.
okay. I've seen it, sir. Yes, sir, I've seen it.
Okay, this session will soon end and I don't want it to end on us.
I've seen it, sir. Yes, sir. Yes.
I'm looking for that account that is making it. Mr. Yola, your account is making noise. I've gotten it. Okay, I think it's from my end. Why is it echoing? Okay, fine. So now we have can someone confirm that you can hear me, Sha? Because it's echoing here.
Yes, sir. We can hear you.
Okay, let's go ahead. Now, so this, if we deduct my income tax, what do I have? That is profit after tax, I mean. Am I right? We can call it no part, net operational profit after tax. Net operational profit after tax, right? Or you call it profit for the year. All right? Now, this is our income statement. Now, the question asks us to prepare income statement and other comprehensive income. So, what will be in our other comprehensive income? Now, for your other comprehensive income, when you have loss on revaluation of account, you put it there. But if it is revaluation surplus, you will add it to your gross profit. Do you understand? So our other comprehensive income now, what do we have? Let's check. We have a revaluation in this account, right? So we have revaluation of our lease property. Now the lease property here, revaluation reserve is 2 million. That's what we already have, right? But let's go to our revaluation. where is the information on lease? So we have a leasehold property that was revalued to 8,600,000. Hello,
Now with you, sir.
what's the value of the asset? This leasehold property, what's the value in the account? Where is it? So our leasehold property was 10 million at the beginning of the year.
10.
And now at the end of the year, we have it to be what? 8,600,000.
600,000.
Right?
Yes.
Hello?
Yes, yeah, yes, sir. We
Now
are
that
with you.
8,600,000, what's the difference?
1,400.
1.4.
1,400. Have we done anything on that valuation? Have we depreciated it?
No.
Have we depreciated it? What's the depreciation on that diesel? I think we did depreciation for it. What's our
We've
depreciation for it?
depreciated it. Yes.
At how much?
One
We have 500.
500. Yeah.
Right? So which means the net book value is not 10 million anymore. It's not 10,000 anymore. It is 9,500. Abi,
Yes, yes.
am I right?
You are right.
So it is 9,500. Now that 9,500, instead of 9,500, the value is now at 8,600. So definitely something has gone, right? So let's do for our what do I call it? Loss on evaluation. So what's the loss on evaluation? My income tax is 5, and this will now be 6. So for loss on revaluation, what do we have? Yes.
We
So what
have
do we call it before? We said the
9,000.
value of our asset. What's the value of the asset?
The value of the asset
As
is
per TB is
is
how
10
much?
1,000.
10,000,
and
right?
500.
Less depreciation
Depreciation. No depreciation of 500.
of how much?
500. We are carry am go.
500.
500.
And that gives us what? 9,500, right?
Yes.
This is the carrying amount.
Yes. Carry am
Am
go,
I
sir.
right?
Yes, you are right.
Or you call it what?
Net book value.
Or MBV. Thank you, sir. All right. Then what do we have? Revaluation.
Of 8,600.
Revaluation. Revalued amount or the fair value. The revalued amount is now at how much? 8,600. Right? So
Yes.
that means we have a loss of how much? 900. If I'm not mistaken, it should be a loss of 900. Are we there?
Yes, sir.
So that is revaluation deficit. So we have to display let's see that it's a loss. What do we have? Yes, who is differentiating it for us? Are they deducting it?
There is loss.
Yes, now. So we have our profit, total comprehensive income now, right? Our total comprehensive income is now at 3,640,000. Any question from anyone?
So are you sharing us this as a
Yes, I'll share the Excel sheet.
okay? Thank you.
I'll send the Excel sheet to the group now. Any question from anyone? Any question? Yes, please go ahead with your question. I think
Professor, I
someone
have
has
a
a
question
question.
on that. Okay, thank you, sir. Please, I want to ask. Can you hear me?
Yes, we can hear you. Go ahead, sir.
Hello.
Yeah, I want to ask concerning road, concerning road that this road that I want to ask. I thought anything like anything like that said, if we have access to publish attack, I thought we are going to do something like schedule of duty. So can we do it like this, like here we do it like this? Is it
Can
allowed?
someone hear you? I can barely hear you.
What he's trying to say is that when you are doing assets, this thing,
Ah, are you
people
hearing me now?
are going to do schedule.
Hello, sir.
Even
Are you hearing me
hold on,
now?
let someone else say it for you.
Can
Oh
you
yeah,
hear
go
me?
ahead, please help us. What did he say?
What he's trying to say is that for PPE, you're supposed to
Uh,
do something like schedule for PPE, or can just do it like the way you do it now.
I know I've not done schedule for PPU. Don't do it the way I do it now. Please, oh. Please, oh, I have a schedule, a very good schedule for our PPE.
That is what he's trying to ask.
Okay, so don't worry, we'll do our schedule for PPE. All right, so this is where we'll end with tonight. Thank you all for your time. In the absence of any other thing, we'll meet in our next class. Good night, everyone.
When are we having you next class?
I don't know. The presenter will communicate. The presenter will communicate to every one of us.
Okay.
Yeah,
Thank you so much, sir.
you're right. All right. Good night, everyone.
Good night.
Thank you very much, sir.
You're
Thank
welcome.
you.
Good night.
Thank you, sir. Good night.